If you're watching stock market videos on YouTube, you're probably trying to beat the market. What does that mean, beat the market? It means earning more than the market's return. If you simply want to do what the market does, just go out and buy an index ETF and you'll earn a decent return over the long run. But we're here because we want to beat the market. And if we're going to beat the market, we have to understand why most people, most of the time, cannot do so. It comes down to something called the efficient market hypothesis. And I'm going to teach you how to overcome the financial theory for why you can't beat the market. Because you can, but you have to exploit breakdowns in the efficient market hypothesis. Now, what does this mean? The efficient market hypothesis says that all available information is priced into the market, investors are rational, and therefore your returns in the market will be random. So you might pick a good stock some of the time and a bad stock other times. And if you do that over 10 stocks in your portfolio, you should end up earning what the market earns. Now, of course, we want to do better than that, and it's certainly possible. In order to beat the market, you have to exploit breakdowns in market efficiency. That means you have to look for situations where information that is not widely known is being priced into the market. And this is this idea that the spread of information isn't fair. And you have to look for situations where people are not rational, where emotional investors are causing stock prices to go up too much or down too much because of fear and greed. So again, to beat the market, you have to exploit a breakdown in one of these two things, either that investors are acting emotionally or that some investors have information that is not widely known. So this is what I do, and this is what I've been doing for 30 years. I look for situations where there's evidence that there is new information being priced into the stock. That occurs when stocks start to behave abnormally. If a stock normally trades 1 million shares a day on average, and all of a sudden one day it's trading 5 million shares, and instead of normally going up 1 or 2% in a day and it instead goes up 10% in a day, then we know that there's some new information about the company's ability to make money in the future coming into the market, getting people excited. And guess what that does? That touches off the emotional element. This is when investors start to chase the stock higher, that have a lot of optimism about the stock, and it will put that stock into an upward trend. So again, to exploit breakdowns in the market, you have to look for abnormal activity as evidence that there's some new information coming into the market and that investors will then act emotionally. So let's look at this on two different time frames. This is a stock that did this exact thing on Friday. You can see here that it started to behave abnormally right there. This was in the pre-market. You see that volume spike and you see this spike in price. Before that, nobody cared about the stock. And it started to behave abnormally right in there. And in the course of the next 3 minutes, the stock went from $3 a share to $9.27 a share in 3 minutes. What was happening was there was new information that investors were excited about, and it pushed the stock higher very quickly as they priced in that new information. Now what happened, and you can see this in the chart, the market's emotion, investor emotion, pushed it too far. Because by the end of the day, the stock had come right back down to $3. But if you are a trader, a short-term trader in this instance, you can buy it here, ride it up, and then sell when it starts to break down and make an outsized profit because you are taking advantage of new information coming into the market and emotion. Here's another example. This is a longer term example. That one was a very short term day trade. This one I picked back in June, right in here. Let's do that in blue. So it was boring, nothing was exciting, and then all of a sudden we saw some abnormal buying action with abnormal volume that told me that something was going on in the fundamentals of the company that got investors excited. Now there's some other principles at work in this chart. You'll see here that the bottoms start to rise. When there's rising bottoms on a chart, you have optimism. When there's falling tops on a chart, you have pessimism. So we had rising bottoms, abnormal activity, breaking from low volatility. And then we see it again here. Abnormal activity from optimism, from low volatility. And over the next few weeks, the stock went from 350 to 850 in just, 10 days? So this is the simple approach that I take to the market. And I do a lot of this kind of stuff. I've been doing it for 30 years. I provide indicators. I provide the education on how to do it all, give you the tools to find them. You can learn more about that at stockscores.com. All right, well, let's get into this week's normal market analysis. And we'll start off, as we always do, with a look at the S&P 500. Now, before I do that, I just want to let you know that I do write a weekly newsletter. If you go to Stock Scores Analysis, free weekly newsletter, it'll take you to this page. If you want to get on the email list for this letter, just put in your email address right there, and you will be able to receive that at no cost. Pick lots of stocks, have had a lot of winners picked in there, so I think you'll enjoy that. All right, let's jump into the S&P 500, SPY, and we can see here that the buyers are in control. We have rising bottoms. We are trending upward, so it's a bullish market on the daily time frame. If we go to the 1 month time frame, same thing. If we go to the 3-year time frame, same thing. So bullish on all time frames. NASDAQ 100, bullish on the daily, on the 1 month daily, or 1 month bullish, and on the 3-year bullish. Go to the Russell Small Cap, IWM. Again, buyers are in control, bullish on the daily, 1 month time frame, bullish, 3-year time frame, bullish, but one issue on the 3-year time frame is we're hitting this ceiling price that we hit at the end of last year, and typically when you rally into resistance like that, you usually get a little pullback. So don't be surprised if the small caps make a little pullback in the short term. What about the Canadian market, T.XIU? You can see bullish on the daily time frame, 3-year time frame, and 1 month time frame. This is a nice thing about the Stockscores charts, and I encourage you to use the charts at stockscores.com. They're totally free to use, and you can just very quickly change your time frames. You can go 10-day, 2-minute, and get a very short-term picture of what the market was doing over the last 10 days. 5-minute, 10-minute, 13-minute, all there very quickly. All right, well, let's move along to gold. Gold, one of the reasons why the Canadian market is doing well. Here's your 3-year chart, bullish. Notice that it broke out of this trading range right in here, and that led to the next 3 weeks of strength. Just like we had a breakout from sideways trading, from optimism right here, and that led into this trend. It's very simple. If you learn how to read charts, you can look at these things and do it in 10 seconds or less. Here's oil. Now here we have falling tops. Falling tops are a sign of pessimism. It's still more or less neutral with a little bit of a negative bias, but I think oil certainly not the best looking market. Looking at the 3-year, it's really just a sideways market for the last 3 years. Oil prices are basically the same as they were 3 years ago. Let's move along to currencies. Here's the US dollar, and you can see that we're more or less sideways. We were in a downward trend, now sideways, but we need to start building rising bottoms before we can get a bullish market rating on the US dollar, and that's why the sentiment stock score is only at 39, because it's relatively negative, but still on the negative side of neutral, I guess. How about Bitcoin, GBTC? There we can see more or less sideways for the last little while, but when we go to the 3-year chart, it's in a long-term upward trend. Finally, let's take a look at the bond market. TLT is the symbol, and there you can see that we had a nice little rally into the announcement that interest rates would be lowered, which came on Wednesday. Buy the rumor, sell the news. The bond market was moving up in anticipation of that news. The news comes out and the bond market falls. Typical reaction, but still a relatively neutral chart. So my ratings then, you can see a lot of bullish on the stock markets and gold, and then a lot of neutral on oil, US dollar, Bitcoin, and bonds. All right, let's go into the trade of the week. Now, this is a short-term trading example that we like to do each day on Stockscores with our active live service, where I'm monitoring the market in real time using sophisticated indicators to look for abnormal activity in real time on a very short-term time interval, 1 minute time frame. So this is a stock that we traded on Friday, and you'll see here that there was this abnormal break right there. That's my action candle that triggers that. We had another one in here, and that told me that something was going on. I actually had bought this market in the pre-market as well. You don't show that in this chart, but of course the market does open much earlier and there is pretty good liquidity on this stock in the pre-market. We then had this nice move up, pullback, and a break of a pullback. That was another good entry point. So you had a good entry here, another good entry here. In fact, better there because the risk-reward relationship was better. And that went for a nice little run from $12 to $18. That's a 50% gain in less than an hour. And that's the kind of thing that you can capture if you have the right tools and processes and strategies and focusing on abnormal activity. I hope you've enjoyed this video. If so, please click the like button, subscribe to the channel, and as always, trade well.